This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. I'm Bailey Lipschultz alongside Norah Mulinda, filling in for Carol Massar and Tim Stenivek for this hour. They are out in Denver for the Schwab Impact Conference. Here's a setup at this hour on this Thursday, November 6th, 2025. Stocks under pressure and volatility has picked up after data showed a cooling labor market. That's led to weakness for the largest tech stocks and cryptocurrencies.
Well, if we look at major indexes, we see the S&P 500 down almost 1%, NASDAQ 100 lower by more than 1.5%. Bitcoin, though, sitting back above that $100,000 mark that we've been watching here, Bailey.
And that all comes amid a scarcity of economic data due to the federal shutdown. So investors are turning to those private readings like the Challenger jobs report that showed the most job cuts for any October, Norah, in over 20 years. That leading to a jump in the odds of another interest rate cut next month. Looking ahead this hour, the U.S. economy is at risk of amid a spreading spending slowdown, and why that resembles a Jenga tower.
And homebuilders betting on a 1% mortgage rates to wake up buyers.
And later in the show, a conversation with former Assistant U.S. Surgeon General and the first ever Deputy Assistant Secretary for Women's Health, that's Dr. Susan Blumenthal, on what's ahead for women's health. But first, a check on the day's trade and top business stories. Here's Charlie Pellet.
All right, thank you very much. And here's what's going on. I do want to begin with some headlines out of the White House. President Trump says he will visit India. And President Trump also says that Prime Minister Narendra Modi is, quote, great and has largely stopped buying Russian oil. The Dow, the S&P, NASDAQ, all in the red right now. Volatility lashing Wall Street. We got you covered on markets with the S&P right now down 58. That is a drop now of 0.9%. The Dow lower by 0.6%, down 304, while the NASDAQ Composite Index is down 349 points on NASDAQ, a decline right now of just about 1.5%. Your 10-year yield, 4.08%, with a 2-year currently yielding 3.56%. Gold up $9 the ounce, $39.88, up 0.2%. And West Texas Intermediate crude down 0.5%, $59.32 a barrel on WTI. Bitcoin right now down 1.9%. Bitcoin $101,700 on Bitcoin. You heard the announcement right here on Bloomberg. Lilly and Novo Nordisk have secured deals with the Trump administration to slash prices for their blockbuster weight loss drugs in exchange for tariff relief and wider access to Medicare patients. Shares of Lilly, they're up 0.2%. Novo Nordisk, the stock right now is lower by 3.2%. Again, recapping, stocks lower, S&P right now down 61. That is a drop now of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. Norah, it's Thursday. It's been quite the week. We got some economic data, the Challenger Gray and Christmas report showing U.S. companies announced more than 150,000 job cuts last month, almost triple the number during the same month last year. And they're crediting AI adoption. As you mentioned, we've got stocks sliding, yields falling as well. And all of that comes against a backdrop of a government shutdown, creating a data vacuum that's making some of the Fed uneasy around rate cuts. I'm looking at you, Austin Goolsbee, and more data showing the U.S. economy is split into the haves and have-nots. We want to dig deeper into the state of the U.S. economy this year with Catarina Saraiva. She is the Bloomberg News Federal Reserve and economics reporter, joining us from the Bloomberg Houston Bureau. Catarina, it feels like every other week we're discussing the state of the economy, resilient spending and consumer sentiment, but all of that's being driven by higher income Americans. Looking at the headline of your story, which is one of the most read on the terminal today, comparing the U.S. economy to a Jenga tower. Why?
Yeah, I think you're right. This is increasingly talked about now, and what we're seeing is that spending is increasingly being driven by those top 20% and even the top 10% of earners. So obviously spending is hugely important to the U.S. economy. It drives 2/3 of economic activity. And the more you concentrate that in one group of people, the more fragile things become, right? So folks are comparing it to a Jenga Tower where you're just removing pieces from the bottom and now the middle parts of the tower, and it's becoming more and more top heavy. Well, at some point, does it fall down?
I really enjoy that imagery there of a Jenga tower, Catarina. We do see, as we mentioned earlier, the stock market down today, but it is important to note that the S&P 500 has returned more than 15% this year. I know that the market isn't necessarily the economy here, but what is your sense on the divide between stocks and the U.S. consumer?
Well, I think what it's showing is that that those stock market gains are really supporting the consumption you're still seeing at the top, because we know that stock ownership is really a divided thing in this country as well, right? Most, only not a huge amount of people in the U.S. own stocks. It's concentrated in the wealthiest individuals. And so when stocks do well, the wealthy spend or keep spending or feel confident enough to spend, right? But it doesn't really help those at the bottom or even a lot of those in the middle because they don't own stocks. In a lot of cases, they also don't own other assets that have been appreciating quickly, like homes, right? So they're not benefiting from those gains. So yes, absolutely, the stock market is still up. The economy is still growing by many measures pretty robustly. So we're not, looking at an imminent recession, but it is, these little things do start to add up, and they just do create a kind of more fragile landscape for the economy.
Catarina, because I think you spoke to Peter Atwater, who I'm a big fan of, who really coined that phrase K-shaped recovery. And I know he was posting on social media today about there being a longer leg to the bottom of the K and that upper leg getting a bit smaller or more pinched. What's your read of the state of the economy? Are we continuing to see really the top 1, 2, 3, 4, 5% of consumers carrying and people having to downgrade? And what are we hearing from companies reporting earnings on that?
Yeah, I think that is really what you're hearing right now. When the economy started recovering from the pandemic, you had pretty widespread benefits at that point. You had lower income folks really seeing their wages increase at a good clip, outpacing inflation and rising faster than wages for those at the top. And now you're really seeing that reverse, which is not a very common situation for the U.S. economy when wages for the higher income earners are rising at a faster pace than those for the bottom. And you're hearing it from companies as well. Across earnings, really over the past few weeks, we've heard that companies are really seeing their bottom line buoyed by those at the top, by luxury spending, things like that. Whereas, the lower end consumers are really not spending. Spending has kind of flatlined. And now, worryingly, you're seeing that creep into more of those middle income consumers. So I think that's where you get into this image of the K, where the bottom leg is really getting bigger. It's like people are going from, perhaps they were, toward the bottom of that top leg, but now they're hopping down to the bottom leg, and their fates are worsening a little bit.
So, of course, we know the shutdown has prolonged to be the longest in all of U.S. history here. And we do have the challenger data, but clearly no inflation data. We are experiencing, of course, a data drought here. But the Fed's Austin Goolsbee pointed to this as a driver of the unease regarding rate cuts. How does this lack of data actually impact expectations for the Fed's next move?
Yeah, I mean, you've really seen expectations come off for the next Fed move, right? At first, before the October meeting, markets were really expecting like 100% chance of another rate cut in December. Now that's really come off. Now, part of that was Chair Jerome Powell in his post-meeting press conference in October really saying that it's not a foregone conclusion that they were going to cut again. But a lot of it is also these comments you're hearing from from an increasing number of Fed officials, and they're basically saying that, when things are foggy, when the outlook is uncertain, and when we're not getting new information from really reliable data sources like the government, the prudent thing is to slow down, right? You don't want to kind of depend on data that's now 3 months old in some cases. So you're hearing just more and more Fed officials calling for, hey, let's take a beat, let's maybe not move in December, and let's just see where things are.
Yeah, and with that in mind, it doesn't seem like much progress is being made in D.C. as it relates to reopening the government. What's your perspective on the economic data and kind of the flow of data and what the Fed wants to see from those numbers in a timely manner? To your point, if they take December off, the next Fed meeting is in late January. Would that be enough time to really catch up and get a better picture of the economy as a whole?
Yeah, I mean, I think the reality is that it'll have to be, right? Because even if we reopen now, there's going to be delays in getting the data out. I mean, I think they would have a lot more data by the December meeting, but we just don't know when the reopening is going to happen. So I think they are just going to have to make a decision. Now, I think what kind of works in their favor right now is that they have cut rates twice this year, and that follows a full percentage point of rate cuts at the end of last year. So they've already given themselves a decent amount of room to wiggle in, if you will. So I think they see that as working that in their favor a little bit. But certainly, I mean, right now, they're looking at private data sources, which we have a decent amount of, especially after having gone through the pandemic. We have a lot of alternative data sources. But you're right, for inflation, not as much. So I think they may have to just face the reality that there might be a longer stretch of time before they really know what's going on in the economy.
Catarina, a story that a lot of people are reading here on the Bloomberg terminal, the U.S. Transportation Department and the FAA plan to order airlines to cut 10% of flight capacity across 40 major airports. This hopes to relieve pressure on the aviation system during this ongoing shutdown. Talk to us about the impacts here, not only on the economy, but travelers. What's your take on this?
Yeah, I mean, I feel like every headline I'm seeing talks about like the chaos that's going to ensue, right? I think it is a really scary prospect as we head into one of the busiest travel weeks of the year here in the U.S., right? Which is Thanksgiving. We're just a couple weeks out from that, and I think that's going to be really concerning for a lot of travelers. So this news is quite fresh. We don't know how it'll ultimately impact the economy more broadly, but certainly flight delays, flight cancellations, it's not great, right? So it hits airlines, but it also bleeds through to other parts of the travel industry, other parts of the tourism sectors, hotels, just a variety of companies could really be impacted by this. And for individual travelers, it really kind of makes them more concerned about traveling. So maybe you'll even have people preemptively canceling their plans, right? If you start to see that, it can have a little bit of a snowballing effect, right? Where it's making something that was already going to be kind of bad and just makes it worse.
Mm-hmm. A lot of interesting stuff there. We got to leave it there. Thank you so much. That is Catarina Saraiva, a Bloomberg News Federal Reserve and economics reporter, joining us from the Bloomberg Houston Bureau. Norah, I want to pivot to another issue top of mind for consumers. That's the affordability of home buying and why things may be looking up. I look on the terminal, average mortgage rates near 6% for most home buyers, but in places like San Antonio, they're much lower.
We are seeing a lot of tactics being used right now in the home building industry. I used to cover Homebuilders very closely, still got an eye on them, but they're really working to take on and find the attention of buyers. We're joined by Bloomberg News US real estate reporter Prashant Gopal from our Boston bureau. Prashant, your story is one of the most read on the Bloomberg terminal today, and I think we can all kind of guess why. We're already seeing people in the comments, viewers listening, trying to figure out where they can get a 1% mortgage rate. Explain this to us.
Yeah, the place to find it is in your local new home sales office. Some of these builders are offering really crazy deals right now. like D.R. Horton, which is the biggest home builder, they're offering 3.99% fixed for 30 years. But the cool thing is, in the first year, you only pay 0.99%, and then it sort of steps up from there.
Okay, so starting with the 0.99 interest rate on a new home, but this comes with the backdrop we were just talking about. The U.S. economy looks like a Jenga tower. Only the top few percentage of American consumers have money. AI is coming for all of our jobs. Are lower rates, at least to start, enough to get buyers to test the water with some of these homes?
Well, I think what builders are finding is that the drop in rates actually for them has worked the opposite way. It's actually with rates at 6%, that means that existing homes are a better deal than they were. And more people who own homes are willing to kind of sell and give up their lower rate because rates had come down. So you have a lot of inventory in the existing home market now competing with new homes. And buyers are spooked, right? So they are worried about this economy. And builders are seeing this with the entry-level market getting hit the hardest.
I mean, these are new homes that we're talking about. How much more are these homes than buying an existing home? My first thought when I think new home, I'm thinking, big price tag there.
Right, so like there's data going back to 1973 that I looked at, and if you take that average over that time, there's a 16% premium for a new home. But for the first time, that has not only vanished, it's gone slightly negative. So it's actually, existing home prices are slightly cheaper than new home prices.
And Prashant, looking at places like Florida, San Antonio, Texas, is this really across this kind of middle of the country of America, as opposed to places like metropolitan New York or San Francisco or other regions?
Well, so you're gonna get the better deals in places where home builders play, right? So there's not as much construction going on in New York, but in Arizona and around Denver, in Austin, Texas, and Florida. But there are a lot of other places, Raleigh. I mean, there's so many markets around the country where people are getting deals right now.
So, of course, we've been talking a lot about the economy, and on the mind of a lot of consumers this year has been the impact of tariffs. And we know that this has definitely been impacting the real estate market. What are you seeing? What are you hearing from sources about the impact of tariffs, if at all, on construction spending?
Well, I'd say that builders, haven't really complained as much about that as you might expect. I think the costs have gone up a bit, but it's just one more thing for them. I think the way it's sort of reaching them is the fact that I think consumers are just worried about what's gonna, how this is gonna affect their what they pay for things, and buying a home is really expensive. So if you're getting squeezed in other ways, you may not be willing to spend that much money on a house.
Awesome. That is a lot of interesting things there. Bloomberg News U.S. real estate reporter Prashant Gopal. Thank you so much, Norah, on the home builders betting on 1% mortgage rates to wake up U.S. buyers.
Yeah, it's really interesting, especially as we're thinking about people trying to get out there in the market. A lot of millennials really struggling to still find homes during this time period.
Yeah, a lot of millennials struggling to buy homes, and stocks struggling at this hour, calling out the S&P 500 right now, down about 0.75%. One of the worst performers in that group, Tesla, down more than 3%. Tesla, Elon Musk giving an ultimatum to Tesla. We're going to talk about someone who knows all things Elon. That'll be next. This is Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session lows, but equities declining for the second time in 3 days. 10-year yields tumbling the most in a month following that Challenger Gray and Christmas data early this morning, showing the largest October job cuts in more than 20 years. S&P right now down 51 points at 67.45. That is a drop of 0.7%. The Dow down 271, lower now by 0.6%. The Nasdaq Composite Index down 1.3%. Nasdaq lower by 316 points. 10-year at 4.08%. We do have the 2-year currently yielding 3.56%. Gold is up $13 the ounce, $39.93, up by about 0.4%. West Texas Intermediate crude down 0.3%, $59.41 a barrel. And Bitcoin right now down 1.8%. Bitcoin 101,815. Boeing will avoid a criminal charge over 2 fatal 737 MAX crashes after a federal judge in Texas paved the way for the U.S. to implement a settlement agreement that requires the plane maker to pay $1.1 billion in fines and compensation to family members of crash victims. Boeing shares, they're lower by 0.3%. Airbnb among the names reporting today after the close of trading. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. Well, Norah, the world's richest man may soon be even richer. Much, much richer. Today, Tesla shareholders are preparing to vote at the company's AGM on a proposed pay package that would be worth $1 trillion for Elon Musk. And whether or not investors are on board, the man himself could choose to leave the company.
With us now is Ed Ludlow, co-host of Bloomberg Tech, and he's caught up with the board chair, Robin Denholm, a few times recently and has really been tracking the saga of Musk's pay package. He joins us from Bloomberg's San Francisco studio. So, Ed, $1 trillion or Musk walks. Is that really what's on the line this evening?
No, frankly. You know, the structure of the proposed package is complicated. It is a 10-year proposal split into tranches. And all told, the total compensation would be $1 trillion in dollar value, right? But actually, what it is set against is a series of both operational and financial milestones. The operational ones are easy to understand. Musk has to deliver 20 million vehicles to customers, build 1 million robots, scale a robo-taxi service to 1 million cars. And on the financial target side, it's kind of classic stuff. Adjusted EBIT targets, market cap targets. The thing that's the sticking point for a lot of investors here, and for Musk himself, is voting power, which is just as the pay corresponds proportionally to each tranche as each milestone's unlocked.
And how have those targets changed, though? Because I feel like the reporting over the last few months and years has kind of been moving of the goalposts, if you will.
Yeah, look, the targets are set and codified in the proxy, which I think was September the 10th or maybe September the 4th or 5th. I'm misremembering, but early September. The thing about the total package is that it's an all or nothing. They are mandatory goals, both operational and financial. And so the issue really in the first instance here for both Elon Musk himself, the board, and investors that vote either way, is that for the board, this has been about keeping Elon Musk, because to their mind, irrespective of the goals that are set for him, he's the only person on planet Earth that can do it. They've literally said that time and time again. So it's a really bizarre situation where Musk is basically saying, I don't really care about the compensation. I just want the power to be able to do the things that the board has tasked me with. And it's that power that those particularly institutional investors, but also the advisory services recommending a no vote, have taken issue with.
So is this a battle between the board and essentially long-term shareholders duking it out here?
A little bit. I mean, what we've tried to get out of Robin Denholm, who's the chair of Tesla's board, on multiple occasions is, what's the plan B? What happens if Elon Musk decides to walk away, if there is a no vote and he's not happy about it? Or, and this is a horrible example, but what if something sinister happens to Elon Musk? You know, he gets hit by a bus, hypothetically. And the problem is that the board's answer is it can only be Elon Musk. Now, in particular, if you look at, for example, Norway's sovereign wealth fund, which is Tesla's 9th largest shareholder, or CalPERS, which is the US biggest public pension fund, both of them have voted no on this package, identifying key man risk as one of the core issues for them. They're saying that there is too much faith being put in just one person here, hence key man risk. The board is saying it can only be Elon Musk, and those are two incongruous and competing ideas.
Well, how has that changed over time? Because when I think of Tesla, I think of Elon Musk. When we were earlier this year, when he was working so closely within the White House administration, the question was, right, is he focused on Tesla, or is he focused on XAI or SpaceX or Doge? Has that actually shifted at all?
In some sense, it goes back to your earlier question, mate, which is how has the package changed or the goals changed overall? One of the mandatory requirements, which is set against the later tranches of stock award, is that Musk participates in a succession plan. So as it's written in the proxy, Musk has to both draw up the succession plan, participate in it, and then have a success in finding a successor by year 10. So that is one of the fundamental differences this time around relative to, I guess, 2018's pay package. However, the difficulty in the communication the company's having with its investor base is they keep saying there isn't anyone on planet Earth who can possibly get anywhere near to what Elon Musk can do. So that's been the hard bit to pass. Like, hold on. You're saying Elon Musk has to help choose his successor, but you're also telling us that there just isn't anyone, internally or externally, who can do what he can do.
I just want to touch on a redhead hitting the screen right now. Ford considering scrapping its electric version of the F-150 truck. That is according to the Wall Street Journal, though Ford hasn't made a final decision on the electric F-150. Ford shares not really moving. Ed, sticking with car makers, sticking with Tesla, one question for you with about 30 seconds left. The vote around investing in XAI, the intertwining of XAI, Tesla, SpaceX, what's on the docket today?
This is a shareholder-initiated proposal. It's non-binding, and even in the event that shareholders vote in favor of it, the board has its discretion to decide what to do. But the idea is that, on the one hand, Tesla engineers already work very closely with XAI engineers and talent. That's a common thing across all of Elon Musk companies. On the other, the concern is, does Tesla end up footing the bill for a company that burns through cash? Frontier model labs like XAI have a lot of questions to answer about their business model and the capital expenditures needed to scale their data center infrastructure. Does Tesla and its shareholders want to foot the bill for that, is what this vote comes down to for many who are participating in it.
Well, we'll have to leave it there. Thanks so much to Ed Ludlow, of course, the co-host of Bloomberg Technology. But Bailey, let's talk about what's going on right now in Washington. I mean, of course, we know Elon Musk is looking to make even more money, but in Washington, we do have President Trump pushing to lower the cost of some drugs. In particular, we, of course, heard some deals being announced with Eli Lilly and Novo Nordisk to slash prices for blockbuster weight loss drugs. With more news on this, we're joined by Bloomberg News healthcare reporter Bob Langreth. Bob, the president said it's a triumph for the American patient. Is it?
So like most of these most favored nations deals that Trump is doing with drug companies, we don't know the full fine details of this yet. The basic parameters, are similar to other deals that Trump has done so far with companies like Pfizer or AstraZeneca. This is kind of the obesity drug deal that Trump is doing. They're talking about prices being offered starting for some Medicare patients with certain conditions as $245 a month with a $50 copay. And then for Lilly's drug, $299 for the lowest dose. But what we don't know is will all Medicare plans have to cover it. So just a lot of details we don't know yet, but this is definitely a win for Eli Lilly and Novo Nordisk to get these deals with the administration that spares them from tariffs for 3 years. And both companies have also gotten a special priority review voucher from the FDA for their new pill obesity drugs that will enable those to get to the market faster in exchange for offering them at lower cash prices. So the company's got something out of it today. So, it's a win, but look, how much overall for how many people this lowers prices, remains to be seen.
Yeah, Bob, how does it compare to a number of the other deals we've seen the Trump administration strike with, call it Pfizer or other drug manufacturers?
Yeah, the basic outlines are similar. So the companies agree for medicines going forward to adopt most favored for new medicines going forward to adopt most favored nation pricing, where they want to price it higher in the U.S. and other wealthy nations. They agree to offer lower prices to Medicaid and offer some low prices on Trump RX, this new platform for direct cash purchases at lower prices. So it's a kind of a similar format that they've done. What we don't have is full parameters of, how it all kind of nets out, how much money will be saved, and how many more people, really will get access to lower prices that don't have it now, because there are a lot of people that are insured and get good prices now and don't need this. So how many people will go through these other platforms? For this one, I think one of the biggest questions is how many more people starting next year in Medicare, that's the government program for the elderly, will have eligibility to get these obesity drugs, at lower prices that is not available at all now yet. And that's not totally clear yet. They're having a briefing in a couple hours with more details on those plans, but they're talking about $245 a month for obesity shots in Medicare for certain patients who also have other conditions besides obesity, like prediabetes and heart conditions.
Well, that's what I wanted to ask next. If you think through the costs of the U.S. healthcare system, you think through the potential savings if a patient who, has prediabetes or is at risk of heart failure, being on a weight loss drug could actually save the government more down the road, whether they're a Medicare or Medicaid. How is that factoring into kind of at least your sources thinking through lower prices for some of these people with comorbidities?
Yeah, we just don't know the details of how this Medicare program is going to work yet. Like, for example, Medicare right now, Medicare prescription drugs, that goes through individual plans, and they differ from plan to plan. And right now, under law, pure obesity isn't allowed to be covered at all now under law. But they are talking about expanding this, to people with obesity but have certain other conditions treated by the drug, like prediabetes. And so, but the fine details, we just don't have them yet. So how widely available they'll be and how many people really will have access to these drugs at this lower price, we just don't know yet.
Well, thanks so much. That was Bob Langreth, of course, talking all about the deal that we've been hearing here from Novo Nordisk and Eli Lilly. He is a Bloomberg News healthcare reporter here. Bailey, but let's take a look back at markets, right? We've been talking about markets that are in the red. S&P 500 down about 0.6%. NASDAQ down more than 1%. But I mean, of course, we were seeing a lot of weakness over the past week, right? From a lot of the chip makers, thinking about the AI companies. Palantir earlier this week.
Yeah, when you think about where we're trading at right now, as you mentioned, down a little more than 0.5% on the S&P 500, off those lows. But looking at the drivers, NVIDIA down 2.5%. That's 14 points in the S&P 500. So we're continuing to see the market driven by not only the Magnificent Seven, but kind of the Magnificent One with NVIDIA. One thing to keep an eye on, though, is that 300 of the 500 S&P 500 components are in the red. So it is a risk-off day after that economic data. So certainly something to keep an eye on.
Absolutely. I mean, we're looking at the S&P 500 still up about 15% year to date. And this comes after two back-to-back years of more than 20% gains here. So lots to keep an eye on. But of course, Norah, Mulinda, and Bailey Lipschultz, this is Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story right now. United Airlines says it will be canceling 4% of flights on Friday, Saturday, and Sunday. That according to Reuters. Right now, we've got shares of UAL, parent of United, down by 0.9%. Also, another headline: Ford is considering scrapping the electric version of the F-150 truck. That according to the Wall Street Journal. The Dow, the S&P, NASDAQ all declining right now. We're well off session lows, with the S&P still down 44 at 67.51. Drop there of just about 0.7%. Dow Jones Industrial Average also in the red, down 262 now, lower by 0.6%. NASDAQ tech stocks down 1.2%. The NASDAQ 100 index down 1.3%. Russell 2000 index of small cap shares down 1.2%, and the Bloomberg Mag 7 index also also down 1.2%. 10-year at 4.09%, with the 2-year 3.56%. Gold is up $10 the ounce, $39.90, up by about 0.3%. West Texas Intermediate crude down 0.3, below $60 a barrel, $59.39 on WTI, and Bitcoin now down 2.2%, just above $100,000. Again, recapping stocks lower, S&P down 48, drop there of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. This is Norah Mulinda here with Bailey Lipschultz. We're filling in for Carol Masser and Tem Stenovic. This is Bloomberg Businessweek Daily. But right now, we wanted to dig into time now for Businessweek Women's Health segment, where we focus on key issues and developing technologies impacting both the present and future of women's health around the world. We're joined today by Dr. Susan Blumenthal. She's a former Assistant U.S. Surgeon General and the first ever Deputy Assistant Secretary for Women's Health. But right now, she's a visiting professor at the MIT Media Lab in Washington. Dr. Blumenthal, thank you so much for joining us today. We wanted to talk, of course, about your work in women's health care, but we also wanted to take a moment to discuss what's going on with the U.S. government shutdown. What's been the impact? What have you been hearing on the ground?
Well, I think the impact is having a tremendous, concern for health. As the great poet Emerson once said, the first wealth is health, and that's the foundation of a healthy life. Before the Affordable Care Act, there were 50 million uninsured Americans. A person went bankrupt every 30 seconds in the United States. Thanks to the Affordable Care Act, we now have the lowest rate of uninsured people in history, 8%. However, if with the shutdown in place and if the tax credits for the marketplaces are not extended, then we have 24 million people at risk of paying twice as much for their premiums, a rise of 116%. An estimated 4 million could go uninsured. That's just not acceptable in the United States. It also has a tremendous economic impact because 99% of businesses in America are small businesses. That's 35 million small businesses in America. And 10 million of those small businesses have the owners and the employees rely on the Affordable Care Act premiums, these tax credits. So that means that, this could be a huge increase in premiums for these small businesses and could affect their economic well-being. It means that 450,000 small businesses would become ineligible for those tax credits. Yeah. If they're not extended. And that's what the shutdown is all about, and why it's so difficult is, this healthcare question is really on the table.
Yeah, a lot of uncertainty around what the next steps are for the shutdown, but I want to focus on your experience. You've been at the forefront of women's health for 30 years, serving under 4 U.S. presidents. What was the landscape like for women's health and women's health research back when you started in government?
Well, when I started, there were no women's health reports or conferences. Women were not in the clinical trials. So our work was to expose those inequities in the early 1990s. And then in 1993, I was appointed the first Deputy Assistant Secretary for Women's Health. We then built infrastructure for women's health in all of the governments at NIH, CDC, FDA. Women's health offices were there. We made sure that women and minorities were included in the clinical trials. Today at the NIH, 52% of all clinical trial participants are women. However, NIH-supported studies are only 10% of all clinical trials, so we have a long way to go. And there are many issues that affect women that have not been studied adequately, like autoimmune diseases. 80% of autoimmune diseases occur in women. These are diseases like diabetes type 1, Sjogren's disease, lupus, scleroderma. And so we need to focus more on those illnesses and diseases that disproportionately affect women, and diseases that affect women differently, like heart disease. Many people don't know that heart disease is the #1 killer of women, but the symptoms may present differently. So we need to train physicians to be sensitive to those differences and to develop treatments that may be somewhat different for them.
Mm-hmm. Well, last month, October, was Breast Cancer Awareness Month. Can you talk to us a bit about your work on this disease, in particular in terms of improving early detection?
Absolutely. Well, 1 out of 8 women will develop breast cancer in their lifetimes. It is the most common cancer for women next to skin cancer. But we need to find it early. And mammography, when I was working in the 90s in this area, mammography was a 40-year-old technology then. It's now a 70-year-old technology, but 40-year-old technology, 3 out of 4 lesions it found were benign, and it missed 20% of cancer. So I thought, if we can see the surface of the Mars with a Hubble telescope and see missiles 20,000 miles away in distant skies, why can't we better detect small lesions in women's breasts right here on Earth? So here's what I did. I called the director of the CIA, the head of NASA, generals at the DoD who worked in research, and I asked them if they had imaging technology that we could apply to finding breast cancer early. And they said they did. And we put our nation's top radiologists together with their top imaging scientists. And out of that came digital mammography, because then mammography was an X-ray. So digital mammography, computer-assisted diagnosis, which was one of the very first applications of AI, artificial intelligence, to health, and 3D medical imaging. And so we got a peace dividend out of our national investment in defense. And I say, what better investment could there be than to save the lives of women everywhere? As a result of these improvements in early detection of breast cancer and also better treatments, we have seen a remarkable decline in death from breast cancer since 1990 of 44%. So again, with the 21st century tools like AI and new technologies that are being applied to the fight against breast cancer, I'm very hopeful that we will bring those death rates down even more so. And if you find breast cancer early, there's a 95% 5-year survival rate. So we can cure this disease.
All right, Dr. Blumenthal, in just about 30 seconds, what are some of the top kind of initiatives that are top of mind or areas of research that you're paying attention to? Again, just about 30 seconds.
Well, again, at the MIT Media Lab, we're focusing on a breast patch, an ultrasound patch that you can put in a bra, and it can be remotely monitored for dense breast tissue. Ultrasound is a very important new technology to use. So, and also we want to look at women in midlife, looking at menopause and new interventions there to make sure that the bonus years of life we've gained in this century are truly better years of life, productive years of life, healthy years of life. Mm-hmm. Thank you for the opportunity of joining you today. Mm-hmm.
Thanks so much for joining us. Of course, that's Dr. Susan Blumenthal, former Assistant U.S. Surgeon General and the first ever Deputy Assistant Secretary for Women's Health. We really appreciate this conversation. It's really important to discuss right now, Bailey. But let's do a quick check back on markets really quickly. We are seeing the S&P 500 and all major indexes lower. NASDAQ down about 1.4%. And it seems to be that's what's still in focus. We see consumer discretionary stocks as the worst performing sector in the S&P 500, but that followed by information technology stocks. We really are seeing tech stocks continuing to weigh on major indexes here, Bailey.
Yeah, a bit of a risk-off mood. Interesting thing to call out, Norah, is that we're about 20% above normal trading volume. So this is a real sell-off on a Thursday that we've seen continued earnings reports.
Absolutely. And even more to come as we're really just moving forward through this earnings season. Lots to keep an eye on here. Of course, Norah, Mulinda, and Bailey Lipschultz. This is Bloomberg Businessweek Daily.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
Bloomberg Businessweek Daily, Bailey Lipschultz and Norah Mulinda filling in for Carol and Tim, who are in Denver, Colorado right now. Norah, red day across the screen. S&P 500 right now down about 55 points. Dow Jones, though, who really cares anymore, down 290 points. Volatility kicking back up.
Absolutely. We are seeing volatility kicking back up. The VIX sitting about 19 right now, on the 19 handle right here, right above that. And we are seeing, of course, tech really dragging a lot of these major indexes lower. But there are a few nuggets, of course, that we want to dig into in terms of some individual movers.
Yeah, let's take a look at some stocks on the move today. I'm Bailey Lipschultz with Norah, Mulinda, and we're joined by Bloomberg News cross-asset reporter Denitsa Tsekova. What's top of mind? A lot of earnings, a lot going on, a lot of red on the screen.
Yeah, but we're starting with one company that is not going to report earnings for until November 19. NVIDIA is actually, it fell as much as 4.5% today. If you look over the last 3 days, it's down about 9%, which is the worst stretch since April. So really one of the biggest sell-offs we're seeing, obviously, in the whole AI space, in tech. Like the big moves we're seeing today are indeed driven by some of the big winners behind the AI revolution. Of course, we had this story yesterday about Jensen Huang warning that China will beat the US in the artificial intelligence race. So perhaps this is weighing on sentiment. Of course, we have jobs data, we have macro. We have a lot of things combined as more and more people have been worried about valuation. And one clear loser in that space is currently NVIDIA. The comments came after, obviously, people have been worried for a very long time. He said China is going to win the AI race. Remarks come after Trump administration maintained a ban on NVIDIA chips, selling their most advanced chips to China. We also saw a report about Michael Burry actually placing a short bet there, which he has warned about sell-off multiple times. Multiple times he has been wrong. But clearly, this week, the combination of factors are definitely weighing in. Of course, still a very strong year for NVIDIA, but combining the warnings with the shaky foundation of the rally we have seen this year, we are seeing sentiment starting to weigh in on NVIDIA and a lot of those AI winners. It's just a proxy of a sentiment, I would say.
Yeah, I mean, we're looking at NVIDIA, of course, always still in focus, but we're looking at shares of NVIDIA up about 41% year to date. That's ticker NVDA. I wish I had a good segue from chip makers to the beauty space, but you're also watching shares of e.l.f. Beauty.
Yeah, I don't know how to connect it as well, but the loss there is much bigger. We can say that for sure. Shares of e.l.f. Beauty fell as much as 24% in pre-market trading. The last time we really talked so much about e.l.f. Beauty was when they signed that deal with Hailey Bieber. There was so much enthusiasm. The stock soared. It was kind of almost like a new era and a lot of optimism. Now we're seeing the opposite part of this. Company full year outlook for adjusted earnings per share, disappointed net sales as well, missed analyst estimates. They're positive about sales growth, but there were perhaps a really high bar and high expectation about Rhode, which is Hailey Bieber's brand. So there is some disappointment there. The company had passed on giving investors outlook in the last quarter. This time they gave about 1.55 billion to 1.57 billion and earnings about $2.80 per share. We've seen some growth. This was mostly thanks to the growth in both retail and e-commerce channels. But that said, it's having a really bad year despite a deal that brought so much optimism for this company, but we can see after the earnings, it's clearly falling apart pretty fast.
Really bad year, down 40% this year, but even today, the worst day since 2018. You're also looking at Robinhood, right? And of course, that was ticker ELF, meant to mention that there.
Yeah, Robinhood had a wonderful year, and it still does. It's still up more than 200%. But today, we're seeing perhaps part of the market sentiment, a really bad day. It fell as much as 10%. The trading platform reported cryptocurrency revenue that came below estimates. Robinhood is so much more than what it was in 2021. They do closed-end funds, they do prediction markets, they do crypto, they do all of these things. And retail investors and beyond have been rewarding them, and their valuations have gone through the roof. Their stock price has been going for the roof. And really, anyone who invested in the company in the last 2 years have been rewarded very well. That said, net income rose 271%. This was better than one analyst expected. They also topped 53 cents average estimate of analysts. Adjusted operating expenses came higher than expected. And a big news is that their CFO is leaving. So perhaps that's also part of the sentiment. That said, they've been growing really fast, so the drop today maybe is not weighing on prices that much year to date.
A lot going on, though. Thank you so much, Bloomberg News cross-asset reporter Denitsa Tsekova. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, Norah, wrapping up the hour, stock still in the red, started in the red, even bouncing off the lows, but still down about 0.6%.
And the NASDAQ, of course, plunging lower than 1%. But of course, happy Friday Eve, everyone.
Happy Friday Eve indeed. For Norah, Mulinda, I'm Bailey Lipschultz. This is Bloomberg Businessweek Daily.